Let's talk about one of the best portfolio moves I've made this month, how I avoided a massive $5,000 loss on my Meta Leap option and turned that decision into a winning position on Amazon instead. A week ago, right before Meta and Amazon released their earnings, I made a critical adjustment to my portfolio, and it ended up being a game changer. Here's exactly what happened. Going into this earnings season, I was holding a long-term Leap call option on Meta, with a $670 strike price expiring in January 2027. I opened that position when Meta was trading around $726. The cost basis was around $16,000, a heavy position, but one that had been doing well up until then. Fast forward to last week. Meta's stock had climbed to about $732, and my leap was up by roughly $200 in profit. It wasn't a huge gain, but it was still green, and more importantly, I started noticing a few warning signs that made me uneasy heading into earnings. Now here's the thing. I've learned that protecting capital is just as important as making profits. If you've been trading for a while, you know that earnings can be brutal, even for great companies. You can have the perfect setup, great fundamentals, and solid sentiment, and still get crushed by one bad guidance number or cautious CEO comment. So I asked myself, is Meta's risk worth holding through earnings right now? Before I answer that, let's zoom out a bit. Meta has been one of the strongest performers in the tech sector this year. The company's core business, digital ads, has been recovering nicely. Their push into AI and the metaverse is long-term bullish. But I noticed something in their last few reports. Expenses were creeping up, especially around AI infrastructure and data center expansion. Meta's capital expenditures were projected to rise again, and while that's good for innovation, it can also hit near-term profit margins. At the same time, expectations for Meta's earnings were sky high. The market was pricing in perfection. That's a dangerous setup. So after some deep thinking, I decided to sell my Meta Leap call option when the stock was around $732, locking in a modest gain of about $200, but more importantly, freeing up a large amount of capital. And that decision, to sell before earnings, ended up saving me from a major loss. Fast forward to today. Meta released their earnings report, and it wasn't terrible. Revenue growth was solid, user numbers were fine, but the guidance disappointed investors. The company announced higher spending plans for 2026 and beyond, mostly tied to AI infrastructure. That's all long-term bullish. But short-term, Wall Street doesn't like higher costs. So the market reacted violently. Meta's stock dropped from around $732 all the way down to $650 after hours. If I had kept my Leap option through the earnings, that drop would have been painful. We're talking about at least a $5,000 paper loss, possibly more depending on implied volatility crush. Instead, I avoided that entirely. Now, here's where it gets interesting. After I sold the Meta Leap, I didn't just sit in cash. I wanted to stay exposed to the broader AI and tech growth trend, but with a smarter balance between upside potential and capital efficiency. So I turned my attention to Amazon. At that time, Amazon was trading around $215 per share. Like Meta, it's one of the Magnificent Seven. But unlike Meta, Amazon had been lagging behind in terms of valuation recovery and market momentum. If you looked closely, Amazon's fundamentals were actually improving fast. AWS, Amazon Web Services, had started showing signs of re-acceleration after a few slow quarters. Their cost-cutting measures from earlier in the year were paying off. Margins were expanding again, especially in their e-commerce and advertising divisions. And with AI integration rolling into AWS and retail analytics, it was clear that Amazon had a lot of room to surprise to the upside. So I made the move. I bought a Leap call option on Amazon with a $200 strike price, expiring January 15th, 2027. That trade cost me less capital than the Meta Leap, meaning I rebalanced my funds more efficiently. Then came Amazon's earnings report, and guess what? Amazon delivered. Revenue topped expectations. AWS growth came in stronger than analysts expected. Operating margins improved. The company also gave solid guidance for next quarter, signaling confidence heading into 2026. The result? Amazon stock jumped 10% after hours, rising from $215 to about $245. And that's exactly the kind of move LEAP option holders dream about. Based on my position, I estimate that the option will gain at least $1,500 when the market opens tomorrow, possibly more, depending on how implied volatility settles. So, not only did I avoid a $5,000 loss on Meta, but I also positioned myself to make a potential $1,500 gain from Amazon instead. Let me break down why this switch made so much sense from a strategic standpoint. First, capital efficiency. The Meta leap was tying up a large portion of my portfolio. Even though I believed in the company long-term, the cost of holding that position was too high relative to the near-term risk. Second, relative valuation. Meta had already run a lot this year. It was trading near the top of its valuation range, while Amazon still looked undervalued compared to its long-term growth potential. Third, earnings setup. Meta had too much optimism priced in, while Amazon had the opposite. Low expectations. That's the kind of setup where good earnings can trigger explosive upside, and that's exactly what happened. And finally, portfolio balance. I always try to make sure my portfolio isn't overloaded in one direction. By rotating out of Meta and into Amazon, I not only reduced risk, but also diversified my exposure to different parts of the tech sector. So what's the big lesson here? Trading isn't just about chasing profits. It's about making smart, risk-adjusted decisions. Sometimes the best move isn't the one that makes you the most money. It's the one that protects you from losing big. By selling Meta before earnings, I avoided a painful drop. By rotating into Amazon, I captured a fresh upside opportunity with less capital at risk. It's a perfect example of how staying flexible and data-driven can pay off in the market. And remember, there's always another opportunity around the corner. The key is to protect your capital so you can take advantage of it when it comes. So yeah, this week's trade was a win on multiple levels. Avoided a $5,000 potential loss, secured profits on Meta before the crash, reinvested efficiently into Amazon's LEAP option, and now I'm positioned for long-term growth as Amazon continues to ride the AI and AWS wave. I'll keep you updated on how the Amazon leap performs over the next few weeks, but as of now, I'm very happy with this rotation. If you found this breakdown helpful, make sure to like the video, subscribe for more real-time trading insights, and drop a comment below. Would you have done the same move before earnings or held through? Thanks for watching, and as always, stay smart, stay disciplined, and I'll see you in the next one.